this year, I believe, holds a lot of excitement for us. Our target is to attract FDI to the tune of 10 billion in certain specific areas. As you know, our economy is in transition. It's in transition from one that has been, over the years, has been based on resources, gold, cocoa, timber, and recently oil and gas, which we export. Now, that does not enable us to participate in the higher value end of the value chain of these things. So, for example, let me give you an example. Ghana and Cote d'Ivoire probably control 62% of the cocoa bean, industry in the world, or the cocoa bean production in the world. But yet, if you look at just the chocolate industry, the revenues we derive is just 5% of what the global industry is. And that is not satisfactory. So we're saying that if the two of us produce the bulk of the cocoa, then we believe that the real value is in adding, value to the beans and exporting. And that's when you get to the higher end of the value chain. So we are looking at processing cocoa here and doing the melting here, making sure that you are in the value chain and not just the production end. And once we do that, then we will derive more revenue, higher value revenue for a product which comes from here. And we are looking at the same for almost all the resources that we have in the country, whether it's gold, whether it's bauxite, whether it's iron ore, whether it's timber, whether it's oil and gas. So that in itself means that we need to be a bit more aggressive on the targets we're setting for investors. But secondly, on the back of that, to significant reforms so that we have an attractive investment climate. And so we are looking at our investment laws to see how much more attractive we can make them, such that we can remove as much front load cost for investors and businesses coming to Ghana, and then create a vibrant business environment that will enable them to operate. And then you can then apply the taxes nicely and evenly. So beyond just attracting $10 billion worth of investment, you're also looking at reforming the investment climate and the business sector to make it more attractive. Now, to be able to achieve that too, then comes to the fourth layer, the institutional reforms. That GIPC as an institution itself needs to be properly set up with the right people, with the right resources to enable us to execute this agenda. And that is almost critical. We just don't go out now to facilitate, attract, promote for investors, but you have to do investment aftercare, because I say that investment is not about just bringing the money, it's about the whole life of the investor, of the investment. So you need aftercare for your investors who come in here, because investment is really a relationship. It's not an event. It's having a great relationship with the investor such that he puts his business there and the business is sustainable over the long term. And so that is what you want. You want them to really plant in here and live in here and do the business here and make money here. So that is also the fourth layer, which is critical for us. Getting the institution rightly structured to enable us to do that. To provide, first of all, to attract the investors, promote Ghana, and then to retain them. Create a great relationship where you give them aftercare, give them data of what's happening, plant them in the policy framework of government, such that even before the policies come out, you have a good interaction with them to let them know why you're doing that, and then it becomes a mutual partnership between foreign direct investment, indigenous or domestic direct investment, foreign portfolio and indigenous portfolio investment. I think that is a much more sustainable way of running the relationship than just throwing out the policies and expecting private sector to respond, but actually engaging them in the policy framework.